right, welcome to the closing beat, everybody. Welcome, and happy Wednesday already. My name is Dustin Tibbetts, financial advisor with Jazz Wealth Managers. It is storming like crazy here in Florida, so if we lose you, we've had internet problems kind of coming and going, so if we lose you, that'll be it. We'll just wrap it up for the day and call our blessings that we didn't get hit by lightning, but we're here to go over the stock market. This is the closing beat, and what we do is we cover the stock market. We go over the good, the bad, and the ugly, or even when things don't really happen, such as today, sort of a quiet day, broad market-wise. You got a lot of information all over the screen to help you make a better decision for your investments, but if you need help with your investments, just go to jazzwealth.com, check us out. Happy to help with your long-term investments, your retirement investments. Maybe you want to open a new Roth IRA, transfer an IRA, or a rollover an old 401k. Happy to help you with that. Actually, you could check out our portfolios on the website as well, but you're not here to hear me talk about marketing our company. You're here to hear about the market. So that's enough times for saying the word here. Let's get started. So on the screen here, off to your right, you should be able to see the stock market was a little higher today. This is what's called a slow bleed higher, meaning it's not very exciting, it's not very eventful, there's not a lot of backs and forths, but the market essentially just trends higher very slowly. We'll go over that in a minute, but the Dow was higher by 60, the S&P added 16, the Nasdaq was higher by 79, going over 8,100, by the way. That's a new record for the Nasdaq. The S&P also hit a new high as well. The Dow is one of the only indices that did not hit new highs or has yet to hit new all-time highs yet. Now, I'll reiterate what I said yesterday. September, typically a rough month for the stock market. The Dow loses an average of 0.7% in the month of September. I would think if it happened again that it would be a little bit weaker than that. The S&P tends to lose about 0.5% on average. Now, the key to that is most of it happens at the end of the month of September. And that's just because people getting back to work. Labor Day's over. We're getting back to work, the kids off to school. By the end of September, things are really starting to get shaken again. So 70% of the time in the last 2 weeks of September, and I suspect you'll see more of this on TV as we get closer, but I like to give you a heads up. 70% of the time, going back to 1970, the S&P 500 turns negative in the last 2 weeks of September, meaning turns negative for the month. And so I'll give you a little hint. 70% of the time that happens. Last year, it did not happen. It only skips a year 20% of the time. I'm sorry, it only does it twice, where it doesn't drop 20% of the time. So it gives you a hint that we didn't have it happen last year. It may happen this year because statistically it is supposed to happen. But those are just numbers, things that we look out for, we find very interesting. So today what happened basically, you've got Canada joining the mix potentially on the NAFTA agreement or whatever they're calling it now. So that helped the markets. And also the Commerce Department, remember we talked about the GDP numbers at 4.1%. There's worry that it's going to come in at 4%. Commerce Department raised it to 4.2%. They see stronger business investments, particularly in software. There's a hint for you if you're stock picking, what the Commerce Department said for you. And for the moment, all those political worries and all the nonsense going on is sort of quieted down, unless you watch CNN, in which case they never quiet down. They're always drumming up drama. But remember, that's what gets your eyeballs. Agree or disagree with that channel, they get your eyeballs watching. So what I want you to see here, by the way, off to this side here, you've got this chart. That's the S&P 500 minute by minute, actually every 5 minutes, what happened to the S&P 500. And I want you to notice that little blue bar off to the left side of that chart showing you that the volume was way less than average, just a quiet day. And so you see the stock market start the day higher and then sort of fizzle out. Does that look familiar? We've been talking about that every day this week so far, that the stock market has really just started with a move and then fizzled out. Nobody's interested in making any major decisions, and that's fine, right? So that's that. Let's go over to the charts here. Oh, good, the charts are working. Here's the Dow. You can see that consistent uptrend day by day taking place. Nothing new to report there. The S&P 500 at new highs. I'll keep my comments that this seems like it's taken a little bit too deep of a breath in. And if one of these mornings we start by shooting off higher, you'd probably see that day turn around and give back those gains. We'll talk about it as it happens. And then the Nasdaq 100, of course, hitting those new highs. Really, really strong move there in the Nasdaq 100 and the Russell 2000. If you happen to follow that, trugging along very nice and smoothly. Here's the thing. If we look at the tech stocks today, that that bow and arrow reference that we keep going with there. We'll keep that comment, right? The bow has snapped back to its original position. That is helping support the markets in a big way. Not an opinion, just a pure fact. We walked you through it over the days as it happened and before it happened, so you could see exactly what to expect from the market. We'll continue to do that. The banking stocks remain in this sort of mood where they're willing to go along for the ride, right? Give them a little good news, the banks have been taken off. Whereas before, go back to last earnings season, give them a little good news and they sold off. So that's a huge change quarter over quarter. I think the banks are still hinting at the idea that they're willing to go higher. They're not going to fight anybody. If we look at the price of crude oil today, strong move for crude. So remember, every Wednesday, the crude oil inventory numbers come out. They've been really interesting for the past 4 weeks in a row, meaning analysts expected something and they were way off. So you have this big volatility on Wednesdays for the price of oil. Today was no different. There was a bigger than normal draw in the supply of oil across the board, whether you're following gasoline, crude, Brent, whatever you're following, across the board, there was a big drop in supply. And so that helps, of course, the price of oil go higher, right? If you think about it, less supply equals more demand. It's kind of like those video games we talked about on the Doe Show today. So that's the crude oil. Gold didn't really do anything interesting today, sort of quiet, continuing to bounce out of those lows. If we go on to individual stocks, do you like pot stocks, do you? I know a lot of people like these pot stocks, and this is one that keeps making headlines, Tilray. Now, mark my words, they are going to get bought out. This is not a company that is going to stay like this for very long. They are grabbing a ton of attention, and they have a ridiculous market cap. We'll go over that in a second. But they reported earnings, and their earnings came in that they lost less than what was expected. This company doesn't make any money, so before you go throwing dollars into this company, they have no way to pay you back aside from hoping the stock price goes higher. They don't make any money at all. They currently lose money. They only have sales of $23 million, by the way, $23 million. And can you guess what the company's worth? The value of the company that Wall Street has put on it has probably changed significantly since I looked this morning. The company is technically worth $4.12 billion. They have $23 million in sales. They lose money. They don't have a profit, right? And they're worth $4.12 billion. They're going to get bought out. That's my prediction. We'll talk about it when it happens. So that's a pot stock, all earnings based, and this is a new IPO, so people really, really focused on that. Everybody wants to dive into pot stocks. Just keep in mind, they don't make any money. Would you invest in old Jazz Wealth if we didn't make any money? If I asked you for $1 million, would you give me $1 million? You'd be like, oh, how much money are you making, Dustin? Do you make enough money to pay me back? If the answer was, no, we lose money, man. You give us the $1 million, we're going to lose it, it's fine, but somehow we'll pay you back. There's no way you would do that. It doesn't make any sense at all. Okay, retail stocks. We're wrapping up the whole retail portion of earnings season. American Eagle Outfitters, they were lower on the day. Earnings came in better than expected. Revenue beat by $30 million, actually, so a lot of revenue there. The company just said they're seeing lower than expected sales going forward, in particularly on their lingerie. American Eagle sells lingerie. Anybody know that? I didn't know that. Apparently, they're not selling as much of it as they were. It's called Airy Lingerie. You got me. Okay, anyways, let's move on. We got Dick's Sporting Goods, kind of a little war of words that the media drummed up today. I think it's not as big a deal as people were suggesting, but Dick's essentially, they had revenue that came in lower than expected. Sales are a bit of a problem, and Dick's was like, hey, it's all Under Armour's fault. Under Armour's trying to sell their stuff at lower price stores like Kohl's, and because of that, we're not getting those customers to come pay top dollar, $50 for a t-shirt. And so because of that, that hurt our sales. We're working with Under Armour. We're going to figure it out. Don't worry about it. Well, the media said, uh-oh, cat fight, right? They went crazy on that. And because of that, Under Armour was lower. Actually, it closed even. Look at that. So it was lower on the day. It actually closed flat. So not bad there. Dick's Sporting Goods, that's all earnings related. So not much to focus on there. If you follow these things, you got Express Scripts a little lower on the day. They reported earnings as well. And then I think Guess, did they report after hours? So I didn't know they were still around. Guess reported after hours. As of now, the stock's shooting up here to $25.50. Strong move for them. So that'll be a strong one that we'll talk about tomorrow. That's going to very likely open higher on the day. A couple other individual stocks to focus on. You got Box. Box was lower by 11% on the day. How did that help? It didn't really budge Dropbox. But Box was lower by 10%. They had a losing quarter, but it wasn't as big of a loss as we thought. So the company even commented for the rest of the year, we think we're going to lose more. So they basically told Wall Street, we're losing now. We did lose, and we plan on losing more going into the future. So how do you invest in a stock like that? Think about that. Really, really think about that. PayPal broke out to new highs today. Jefferies says that this stock is going to $110 a share. Do you agree? It's currently at $93, and they said PayPal with their subscription services, they think that's going to generate more money. And then also Venmo. PayPal owns Venmo, remember? And so they said because of all of that and continued growth, $110 a share. So if you like following analysts, looks like there's about 25% more to make on that one there. And then Square. Square is at 86. That was up $6 today. Guggenheim, that's an analyst firm, they said our price target is now $100. They had their price target at 75. So they hit their first price target. Good job there. And now they say $100. They say higher base revenue as well. And also they have something similar to PayPal. It's called Cash App. I've never used it. But they said that Square should be able to profit more from that. Lots of good things they had to say about that company, really. That's really all that is. If we look to the bottom of the S&P 500 today, that's your retailers. Tiffany sold off 4%. Kohl's lost 2%. Kroger's 1%. That's not retail. Nordstrom down 1% on the day. Couple others, just little bits, little losers there. So it makes me want to look at the retail sector. And just a couple days of a pullback there. So not too bad. It's actually starting to slow down just a little bit. So retail stocks at the bottom of your performance today. At the top of your list here, you do have a couple retailers, but you have oil-sensitive names, oil-sensitive companies or oil production companies. You got Marathon Oil, big winner, up 5% today. And things like Royal Caribbean up 3% on the day. What else do we got here? Other oil companies, Apache, Hess, things like that. So getting a little spike on the price of that oil today. And that's what we have there for the stock market. Be careful, by the way. I have to just point this out. I'm talking to more and more of you who are trading actively. We may do a little bit of a rant tomorrow on the Doe Show, but I'm talking to more of you that are actively trading. And while I love that, I'm here to help. I love the whole concept of it. That's what we do, of course. But be careful. There's a saying in the market. A rising tide lifts all boats. And so, really, the silly as that sounds, it means that while everything's going up, you may think you're good at buying stocks and selling them. There will come a time where that ends. For the last 9 years, anyone who wants to buy stocks has probably done pretty well, provided you're able to hang on for more than 5 minutes. So be very, very careful there. I'm talking to more and more people that are like, I'm going to bet my whole retirement on Facebook and some pot stocks and stuff. Put some money aside for that fun. I love that, but don't put your whole nest egg into one shot. It will come back to bite you, I promise you. I can give you every stat on the planet that proves that. If I wanted to make $1 million like tomorrow, I would actually just start a come trade the stock markets and make $1 million. I have no fear of teaching all of that. I know I could show it all, but I went through that. Be very, very careful, please. So just wanted to point that out. Hey guys, leaving comments, love it. Thanks, Kevin. SMG is killing it. You own 50 shares, killing it, love it. E-commerce stocks, we mentioned your Square. Didn't look at MasterCard, Visa. Visa, yeah, that's still hitting new highs. That looks good as well. Slow, steady uptrends. That's a big difference from things like some of the tech names that are more rapid and aggressive uptrends. So, Derek, do you ever adjust investment strategy on a long-term bull market? We adjust all the time. Once a month, we update customers to let them know, what did we adjust? Did we slow down? Did we speed up? Did we make any changes? And if so, what happened? So that's it. Technical analysis trading videos. We did 2 for our customers on candlesticks, just getting a little groundwork laid for them. And we have a 3rd one coming up where we're going to put it all together to kind of continue with that technical analysis. So we do. Little by little. Gold stocks, European stocks. Gold stocks, I'm going to keep that same thing, Kevin. I'm going to keep mentioning that is coming out of a bottom. If you're a short-term trader, you like the price of that discount there, I have no problem with that. Make sure it fits what you're trying to do. Will Jazz include marijuana stocks eventually? We actually are playing with a portfolio that to see how it performs. I'm not happy with it. Probably not. It's a tough one. How can a stock like Square compound long-term without paying dividends? I know Visa pays, nervous about Visa with competition. So when you're growing that fast, think about it. When a stock like Square is growing as fast as they are, do they need to pay a big dividend, if any at all? No, right? They're sitting back going, hey, we're performing for you. We are building a company where the stock price is growing so fast. We want you to invest because our stock price is going up that fast. We don't want you to invest for a dividend. Now, something like Verizon, they're like, you know, we're kind of big. We're doing all we can do over here. We want you to keep your money in the stock, and so we'll pay you a dividend. That's a big difference there. So Square can get away with that for a while if they keep this up. That's it. Oh, wow, lots of you leaving comments. Yeah, so Punk and Disorderly Gamer, he's got it. He's got it. A little additional stuff there. I like it. Yeah, I'm not like a fan of, I know you guys like that Scott's Miracle Grow. I'm not a fan of it. Certainly discounted if you want to take your shot and try to buy that. I don't like it. I tend to think if you're going to play that weed game that you start leaning towards the beverage makers. Hint, hint. Right? There seem to be gearing up piles of money to make that happen. We made that comment about Tilray a minute ago. Getting bought out. I would not be surprised if we woke up one morning and some beer manufacturer, some spirits company, there's a couple big ones out there that have already started making that move. I wouldn't be surprised if they found their way into that. I get it. It's a completely different approach to they're not selling pot like in little bags and stuff. I get what Tilray does, but I just wouldn't be surprised. PayPal, well, you know, I mean, I would agree with the Jefferies analyst if that helps you make your decision there. When should you sell your VOO, Paul? That's the one thing I can't say publicly, actually. I can't tell you when specifically to buy or sell a stock. Big, big trouble. And if you're in an index fund, isn't the name of the game of the index fund just to hold it forever and not ever do it? We're going to do a whole thing on index funds tomorrow with the Doe Show because I have some compliments for those. I have some reasons why I love them. And then I have some reasons why I think some people are fooling themselves. But we'll go over that tomorrow. CRM, did they report after the close? Yeah, that's right. Salesforce.com, I hope they killed it. Oh, well, yeah. So it's down a couple dollars after hours. That's actually a pretty small move. I think the expected move was somewhere around $13. No, sorry, $6. So that's not bad. I think it's kind of a non-event there for Salesforce. No problem there with that one. Your kids watch their accounts grow for the first... Oh, that's awesome, man. You got your kids involved? I would take that all day long. I love that. Get your kids involved. My kid, she tries. She's got a lot going on. I wish she was more interested. AMD. Oh, yeah. We didn't look at AMD again. AMD. So that's that game, right? It shot up way too far, too fast. We mentioned it yesterday, that back and forth of what's happening there. Remember, that's people going, oh, it fell. I'll buy more. And then on the way back up, people going, shoot, I didn't get a chance to sell at highs. I'll sell here. And so you're going to have that tug of war right there. I expect that to continue, Stick. Freeport McMoran. Oh, my gosh. You guys are cutting in there deep. Most people are just like, hey, Facebook. Freeport McMoran. So this one's been sort of beaten up lately. I believe earnings have struggled a little bit. Can I look at that here? Let me see. No, they've picked up recently. If we could just stop for it. Yeah, earnings over the last couple quarters have picked up nicely. The stock price hasn't recovered from that. That could be one of those that I think probably what you're looking at is the idea of, hey, can I sort of pick off this bottom a little bit here? Not bad. I like a good discount. Yep. Oh, we got a Chinese fan there. Love it. All right. Well, that's basically all I have to offer today as far as stocks. I know there's not a lot really going on. Facebook, one last thing we'll look at here. Facebook has not even tried to recover from that dip. Remember, what you've seen over the last few days, look at those candlesticks. If you're a technical analysis player, you look at those candlesticks. Just think about it. Every time you see what happened today, you go, I need more information. I can't do anything until I get more information. If you take that approach, you will avoid owning a stock that isn't going to do anything for you anyways, at least in the short term. You want to see somebody make a major decision where you can look at that and go, those are the bulls. I see what they're doing there. I want a piece of that. Or those are the bears. Let me back off a little bit. Or if you like shorting stock, then that's something there as well. If you sell a stock at a loss, does that remove the taxes owed from the dividends on the current year? You can count it as a loss. I believe it's $3,000 a year is the cap on how much you can take in capital losses. Did they raise it with the latest tax reform? I don't think so, but I think it's $3,000 a year you can have as a loss. You can use that to offset your gains, if that helps you. Perfect. Well, you guys are killing it today. I appreciate every one of you guys watching. We're going to be back tomorrow with the Doe Show. We're going to talk about index funds. I'll try to make a nice argument for both sides of that one, as I do have nice, arguments for both sides. But enjoy the rest of your day. Of course, we'll see you tomorrow for the Doe Show, and that's all I got. See you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.